Well, what's going on, guys? Welcome back for another episode here on Let It Grow Investing. I'm Jeff. We're going to be covering everything that is going on in the market. Another crazy week out here, and a lot of different things to talk about. We got Trump meeting with President Xi of China and trying to get a trade deal done over there. We've got a lot of different earnings coming in. We've got a lot of things trending up, some different partnerships that were announced, and we're here to talk about all of it. So, yeah, first up, I did want to say investing challenge. I'm buying $200 worth of a stock every week based on kind of my thoughts here. It used to be based on a poll, but I kind of changed that up. We narrowed it down to 12 stocks on January 1st that we wanted to potentially add this year. And we're focusing on those for the duration of this year. So every week on Mondays or Tuesdays, if the market's closed, I will be buying one of these 12 names. You know, a lot of familiar names, right? NVDA, Tesla, looking at my sheet right here. Meta, Amazon, Eli Lilly, NextEra Energy, CrowdStrike, Costco, Bank of America, AMD, and as a kind of a sweetener, IBIT, which is the Bitcoin or one of the Bitcoin ETFs. So yeah, looking at all those, there's been some highs in a lot of those in the past this past week. So we're trying to see which ones do we want to add. Why are we looking at those for any given week? And then really, where does this portfolio go, right? We haven't really sold a whole lot. I think, what was it, 2023? We sold off some losers in that first week. We kind of regrouped, put that money elsewhere, but that was about it. We haven't really sold anything. So yeah, what are we looking at? Well, first up, President Xi and President Trump talking about making a deal, right? They had about an hour and a half of a phone conversation, and they kind of ended on good terms. It sounded like, and their teams were going to meet and try to kind of finalize what was going on over there. So we're still. I haven't seen anything as of today on Sunday. Granted, I've been here, there, and everywhere: birthday parties, soccer games. Part of microwave that is brand new because the light wasn't working, so just a busy Sunday. But nonetheless, I haven't seen what was going on as far as trade deals, anything going on today. So as far as I know, this is still in the works and nothing is completely finalized. So one thing I was watching this week, I'm going to go ahead and share my screen. We're going to pull up SoFi. I am watching this one. We have been in SoFi for quite some time. And I was trying to figure out, do I want to write some covered calls on this, right? We were down around $6 in August. We're up to $14.24 up here. We see that. We're up 4% on Friday. We're creeping back up to some of these January highs, right? So we were all the way down at 6. We tripled by January. That's about 4 months. And now we're, kind of in limbo right here, right? I guess you guys can see the whole screen. For me, it's got my face on it might not be able to see it. Let me see if I can pull this one up to see this screen a little bit better. There we go. You can kind of see the year to date, right? We started real strong and folded, right? Now we're kind of coming back up. That's got a lot to do with what Trump's saying, right? He is not on the student loan forgiveness plan. So a lot of people that have student loans are banking with SoFi. That is a lot of their business. It's going to give SoFi a little bit more of a leg to do more refis, right? So more people are going to be refinancing their student loans, whatever else with them to get a better rate. And potentially that could be a growing trend for SoFi as President Trump is not going to be forgiving these student loans. That is not what he's about. We've kind of known that. That was part of the playbook from the beginning. So I've been in SoFi for quite some time. My personal account probably has around 1,700 shares. And I'm thinking, hey, what do I want to do here? What's the play? What am I ultimately doing, right? So there's not much on the way of upside from the different analysts. Average, being a negative, the high price being $20, about 40% of upside. The low is, $6. So there's a big spread here. I'm not saying that for the standpoint that this is my homework. That is not my homework. That is simply where the analysts think this thing could go. But I'm in the positive territory, right? So if I wanted to write some covered calls, if I go up here and look at the options, right? Do I want to take this risk of, say, a July 7th, a 7-Eleven birthday shout out there? We got, if I wanted to sell my shares at $15.50, I would be making $48, or I'd write a limit order at 40. Well, this is 48 cents, but multiply by 100 because these options are traded in blocks of 100. I would be getting $48 to write this option to sell 100 shares at 15.50. So I would essentially make $48 off the premium, and then I would be selling for what is that? Why am I drawing a blank? $1,550. I'm trying to do the math here. It's been a long day, guys. Sorry. So yeah, do I want to do that? Do I want to get this premium, potentially have this 100 shares swept out of my account on July 11th? And I don't know that I really do. Is it worth $48? Yeah, I could buy, 3 more shares with it. But is that really my ultimate goal? Am I just trying to get that as like a dividend? Do I really want to get out of it? Do I think it's going higher? So that's where you got to start doing a lot more homework of where is SoFi going? Is the Trump administration a good thing for SoFi, which I think that it is? So do I think it could go up from this point? I do. So why do I necessarily want to do that, right? I could then, if I wanted to, we can, just for argument's sake, we can go out to, hey, we can go out for a longer term, right? We can look at these January calls. And now when you're looking at a $16 call, I'd be getting $209 to sell 100 shares at 16, make a little bit more on the selling price, make more on the premium. So now if I did 17 contracts, that's going to be $3,400 to write this call for 17 contracts to sell them at $16 a share times 1,700 shares. And then I'm getting the 209 times 100, which would be $209 then times 17. So yeah, it's a risk that where you're getting out. So that's kind of the thing. Is it something that I want to do? Do I need to generate $3,000 now by writing this January 16, 26 call? Or do I want to let it slide? So maybe I write a couple of these calls, right? Maybe I want $1,000. So maybe I write 5 contracts against my shares to sell at $16 in January of next year. So just some different thoughts that I'm having. Where do I want to go? What kind of risk do I want to take? Do I want to generate some cash from the shares that are just kind of sitting stagnant right now? What do I want? So that's one thing. I do think that the stock could be trending up, though. So maybe we wait until we go back to that previous high, right? Maybe we go back to that $18 high price point, and maybe we write it there. Maybe that's the point where we think, man, this might be airing out too much. Maybe at $18, maybe that's where I'm thinking, all right, let's write some covered calls and then write it for a $20 strike price and still get that extra premium. So again, another gamble. It's all about what type of risk you want to have and what you want to do with these shares. Palantir's kind of doing the same thing. Palantir's, pushing back up higher. We saw this one up 6.5% on Friday. Man, it's getting real close to these highs from back in. Oh, this was actually June. Sorry, this is actually this week. So it did drop, but we are at some of these highs from that we've seen recently. And I thought this one might have touched it back then. That was in February, but we came back down. I told you guys in the 80s this was worth buying, and we went straight back up. So again, do I want to write covered calls on it? Do I want to sell it? I don't know that I necessarily want to sell it, but man, it is nice seeing that 500 or 600% gain on this position. And even in the investing challenge account, we've seen similar. I don't necessarily want to cut and run. I don't want to have the tax bill from selling a bunch of shares. Do I want to take a little bit off the table? Maybe I do that. It's, this looks scary, but if you actually get into the actual growth of this company, I still think it's a blockbuster. So another thing to think about, we've got Meta, which I am leaning on to be a huge grower for quite some time here. And I forget that prediction. I want to say here, somewhere around here, I was saying we can get back up to 700 when we were at that low 500 mark. by the end of the year. And man, we're right there. We're at 697.71. But if you were behind Meta at that 500 handle, and congratulations, that definitely worked out. And I still think that this thing's got a lot more growth to go. I know that we've caught back up to this price target, and I think we got to reevaluate, right? They are doing some different deals with some different people. They are reaching out with Constellation Energy. That is one of the new ones from this week. They are looking to get an energy deal to develop more of their databasing, I believe. They've got, let's see, I want to pull up the actual article here. Not that. Meta seeks exclusive video content. This was another one. I think this was with Disney and A24 networks. Let's take a look at this real quick. I just want to make sure I'm doing the right thing here. Where is this one? Let's go up. We've got exclusive video content for upcoming VR headset. Yes, Disney and A24, as well as similar production firms to attract new users to the device. So we've got expected to be priced below 1,000. They are still leaning on this metaverse. They're leaning on AR, VR, all things augmented virtual reality, and that is still something that they are looking to do. Building out with Disney and A24 makes a lot of sense to me. We will see what happens there. We've got Broadcom, $1 trillion stock you shouldn't ignore. I've been saying that for a long time. Constellation's Meta contract, there we go. More deals could be on the way, right? So we've got Constellation Energy's landmark power purchase agreement with Meta could herald a new contracting age, yet a few on Wall Street are staying on the sidelines to see how it shakes out. Under the terms of the deal, Meta will buy energy from Constellation's Clinton Clean Energy Center starting in June 27, the same year that the Clinton, Illinois-based zero emissions credit was set to expire. Now, because of the agreement, Constellation can apply for federal relicensing and can make upgrades that will expand the plant's power output. Meta and other hyperscalers invest in AI and ways to power it. We think that there's a balanced risk to the upside and the downside, the analyst wrote. So again, they're looking for ways to get more energy, right? Essentially, even locally, we've got energy bills going up. I believe this week the new rates are going in, and essentially we're all using more energy, right? I don't think we're continue to plug more in. We're not unplugging all the other stuff. So I think we all are using a little bit more. And I think that is definitely prevalent on the hyperscaler side, right? As far as going AR and all the databases and everything that we are doing, all the uploading, downloading information that's being transferred. I mean, everything that's plugged in, everything Internet of Things, all of it is just drawing more and more energy. So I think that this could be a great thing for Constellation. Obviously, Meta needs a way to get all of this energy, and building at a facility near a power plant and opting to buy from them gives both of them some sort of security going forward. So definitely big news there. I still think that this, rollout of AI is still in the beginning innings. And I think that is a huge driver of growth going forward for Meta, for NVIDIA, for Broadcom, for Micron, for all of them, really. We've got Eli Lilly. That was next up. And I was telling you guys last week, the week before, that I really, really like this stock. They had details of, no, that was not it. They had a new GLP-1, new group or weight loss drugs. Is this it? I think this might be it. And Amylin, after the slimming effect of Ozempic and Zepbound earned billions for Novo and Eli Lilly, another weight loss drug called Amylins is drawing. No, that wasn't it either. One of the more attractive targets in the obesity space, as evidenced by recent deals. Guggenheim Securities team led by Seamus Fernandez explained in a Wednesday note. Yes, this is not what I was looking for, but I know they have another deal. That is not it, guys. I'll have to pull this one back up. I thought it was here. Heart disease could be a goner when these new drugs arrive. That'd be cool. That might have had something to do with it, but I'm not 100% certain. Response rate, ovarian cancer. So I've told you guys that they got a lot of different things coming out. that they have a really strong pipeline. I'm still bullish on this one. They adjusted, TD Cowen adjusted to 960 from 1050, but maintains a buy rating. And that is still significantly up from 770. So I am still on the buy side of this one. I did do a little bit of buying this week. I sold off some Citi. I can't say that I copied Warren Buffett, but he was getting out of it. It went up a little bit. That's okay. I don't think there's as much upside, right? I got this one during COVID. I got it in the 30s, I want to say. And I'm just kind of like, where's it going? Is it going to do anything? Are we going to get a lot more refis? Are we going to get a lot of deals on Wall Street? We're getting a couple, but I don't know that it is, this super upside priced, so cheap right now type stock. Yeah, 13% of upside. So I ended up selling a few shares of Citi. I bought some UNH. I know we've talked about that one. I'm not advocating that you go and buy it. I know there's problems that could arise over there. I'm not saying it's for everyone. But at this point in time, I bought some, right? So I bought some UNH. I bought some Lilly, which we already looked at. I bought some Nike. I still think that this could be a long-term winner. I know that there's a lot of problems right now, and I don't expect it to go up right this second, but I do believe that Nike's going to go back up with the new CEO, with all the problems in China and inventory and woke and DEI kind of subsiding. I do believe that Nike will come back. They're getting more out of direct to consumer. They're trying to rebuild their core businesses and running football, basketball. I think that is some smart moves. So Nike was purchased. Citi, I'm not out of it, but I have less of it. What else? And yeah, I guess I could pull up my orders. I don't really like being that forward with you guys, but that was Sun's page. What is this? Why is there nothing? Oh, executed. We did some UPS. Had some covered calls, right? I had Micron at 110. It did go over 110, but then closed Friday under 110, so I kept that. I had Broadcom at 280. Earnings came out and went down, so I kept that. Palantir, these are open. Palantir's at 150. And I don't think we're going to get there by the 27th. If we do, that's okay. It's only one contract, which, again, this was at 275. So I made $275 by simply writing this call, made 360 on Broadcom by writing this call. And Micron, where did I write the Micron call? It's not on this sheet. But yeah, a couple different things that I bought. Like I said, I sold some Citi, not a whole lot, but 25 shares. And yeah, that's what I was looking at this week. So I moved a couple dollars around, nothing crazy. I did buy more. What was it? NVDA in the investing challenge. We talked about that. We were looking at ChargePoint, one that we were looking at for a long time now, but I haven't really talked about as of late. ChargePoint, EV charging network. They partnered with Eaton, and they are making a deal to build out the EV charging network. ETNB, come on, ETN. And this one is a solid company, right? You're going to get a dividend here. This is probably a little rich, but I'm guessing forward's a decent bit cheaper. So they have a partnership. We'll see this here. Establish industry first EV charging partnership. So Eaton wants to build out the network with ChargePoint chargers. So we are looking at that. We're trying to see what happens there, right? Because Tesla's really been running away with the lion's share of it, even in the Rivian game. A lot of people talk about using the Tesla chargers, and now the Tesla Level 4 or Series 4 or whatever chargers they are now work better with other EVs, right? They have longer charging cables to reach other charging ports on EVs that aren't a Tesla, where it's at the back left. Rivian's at the front left, but the Tesla one, if you pull in, it would be on the opposite side. So now they're trying to accommodate more people other than Teslas being at their chargers. So a lot of changes there, but it is really good to see some other companies start to step up, right? So we're starting to see ChargePoint get back in the game, but at the same time, partner with someone bigger like Eaton. A market cap on Eaton's going to be at 130 billion, call it. If we go back over to ChargePoint, CHPT, we're going to see a much smaller company, right? Only 344 million. So yeah, you're going to definitely get this boost, right? But a lot of the problem here is that, well, I mean, I got a lot of problem with ChargePoint. That's, definitely an issue here. I mean, I did not play this one well, and now I'm basically riding out what is a terrible decision. But like I said, I'm pretty much an open book here. I'll tell you that it didn't go well, and I didn't pay attention to it enough, and I made a lot of mistakes on this one. So now going forward, here's the problem, right? The stock is dropping. There aren't enough EVs. So who's going to be buying all these charge point chargers? It's like the people that were early adopters, the people that were buying the Nissan Leaf and other cars that were like way early. All those people that were really looking to get an EV, they've all bought them. And right now, it doesn't seem like anyone is adopting it. It looks like Trump is not pushing it. Trump and Elon look like they're having kind of a spat somewhere, and it doesn't really look like they're, eye to eye on some of these different things. So I don't really know that ChargePoint is going to be a quick turnaround story, even with this partnership with Eaton. So I can't go out and say this is a stock to buy, right? It's going to turn around. It doesn't really seem like the market wants it. It seems like the people that already have them like them, right? And some people say they go back. Some people have one of each, gas and electric. But it seems like for the most part, a lot of people that were looking to get into them have already bought them. That means the chargers or the EVs, either way. So yeah, it seems like a slimming demand. You don't have the government mandate. And it seems like a lot of the people are just going to the Tesla network because it's available. So not really something that I am, beating down the table saying we got to get in on this one. Not one that I'm buying, even to average down. I've thought about it. I just can't do it. I mean, as you saw, I already lost enough money on this one. So I'm not in the point of trying to rally for ChargePoint. I'm just not. So that's my 2 cents. Another one that is actually reaching a partnership with Spotify. Spotify is wow, I didn't realize Spotify was at $712. What had happened here? Oh my gosh. We were at 315 last July and we're sitting at 700 now. All right. Yeah, didn't realize that. United Airlines to offer Spotify content on seatback screens. So yeah, partnership deal. You can watch your movies through whatever United offers, but now you can listen to music. You can listen to podcasts like this one, which is hosted on Spotify, or you can listen to audiobooks on Spotify. So now you got 130,000 screens that are going to be rotating people through them every single day. So it's not just 130,000 new eyeballs. It's multiplied by the amount of people that are on those planes for a long duration, right? So, or constant overchange of who's going to be in that seat. So now you're getting a lot more people hooked on the fact of, oh, I started a book on the plane. I want to download the app when I get home. I want to pay for premium. I want to, see more ads on there. So I do believe that is going to have a carryover, right? You start listening to podcasts on there. I've got time. I'm in the air, whatever. I liked it. I'm going to have at least a portion of those people be new listeners or come back to finish up whatever they started at least. So I'm curious to see what happens there. I do think that could be a strong move for Spotify, get in front of a lot more people that are in a captive audience. And yeah, that could really be a driver of growth for Spotify. I don't know the terms of the deal. United trending up pretty nicely, almost 5%. I don't know if that's on the back of this deal. I can't see why it would be. Still has about 17% of upside, but I don't really know. I mean, for United passengers, it makes sense. For United, I mean, are we going to pick to fly on United simply because they have Spotify? I don't think so. But I think it's a better deal for Spotify than for United, depending on what the terms of the agreement are. Maybe Spotify's paying X amount to have their, their app or their service streaming through these airplanes. So yeah, I don't know the terms, but first glance, I think Spotify's the winner there, right? Depending on what they're paying for it. Going forward, we talked Trump and Xi. We talked about my trades. I did want to bring up One that I have not looked at. I've never really done this. The name is CoreWeave. It's CRWV. I know very, very little about CoreWeave. I know that NVDA was a investor in CoreWeave. I have not even once looked at the stock. I don't know what it is trading at. I have just seen a lot of articles. So I kind of wanted to do a quick little look and see what CoreWeave is about, see if it's something that we could potentially be buying, and is it something that we should maybe be looking at as a $64 billion company? Is this something that is going to get a 3 or 4x type play going forward? And truthfully, there's not even enough here for me to do what I was looking to do, which was I was going to pull up maybe a Refinitiv. There's a Tip Ranks. There's a Morgan Stanley. Maybe we'll look up those two and see just what is going on here. That is not what I wanted. So Morgan Stanley, I'm going to share this tab instead. Q1 25 riding high on the AI wave. We got a ramping Gen AI demand accelerates CoreWeave's build out plans. While this enabled a large revenue beat in Q1, it also increases interest expense and CapEx expectations for fiscal year 25, pressuring the free cash flow. However, remains a solid long-term play on emerging GPU economy. We size at $360 billion in 2028. So that is going to be the economy of the GPU size. That's not going to be CoreWeave's portion. For the bulls, most obvious impact was accelerated provisioning of GPU capacity. Revenues totaled $982 million, growing 420% year over year. That's fantastic. Wow, which also enabled management to push their full year 25 revenue target to 4.9 to 5.1 billion, almost 400 million ahead of the consensus at the midpoint. Okay, so we're growing massively and we're outperforming for 25. 420% growth year over year on revenue is fantastic. Additionally, management talked signing a new hyperscaler in the quarter, as well as signing a $4 billion expansion with large AI enterprise in early Q2, not in the revenue backlog figure. Given the commentary from CEO Michael and Trader regarding the expansion, potentially pushing one customer to greater than 50% revenue backlog in Q2, the customer is likely OpenAI, which would further validate CoreWeave's positioning of operating Gen AI infrastructure for the most demanding AI workloads. Another important positive data point was the expansion in contracted power to 1.6 GW, guessing gigawatts, from 1.3 at the time of the IPO. Yada, yada, a lot of science. For the Bears, balance of 14.7 billion was down 400 million quarter over quarter and down 1.2 billion year over year. Performance obligations. Despite being signed in the Q1 as the OpenAI contract, despite being signed in Q1, was not included in the RPO balance. Management cited their accounting firm still looking to resolve the correct accounting treatment for the contract as rationale. Okay, so a couple things here. They are obviously growing, right? We've obviously got a lot of growth. We've got the RPO balance. So I'm guessing that is what they are obligated to move out of inventory. So they have less of a backlog, I'm guessing. And so it looks like they don't have as much to make going forward. I take that. That's how I'm taking it. They had more. Now their backlog of demand is down 1.2 billion year over year. So not as much on the books as they have to get out. A much higher CapEx expectation for fiscal year 25, now expected between 20 and 23 billion versus 18 to 19 billion. So we are spending a lot more to build, plant, process, whatever. And yeah, that's going to cost them. So we got to see what kind of effect that has on the free cash flow. Significant reduction in consensus free cash flow estimates going forward, rather increase in expected cash burn, right? So they're spending a lot more money than they were anticipating. Could be to get this open AI deal or to get more scale quicker, right? So they're spending a lot more money. So we got a lot of different things here. Significant revenue upside, obviously beat consensus of 857 million, made 982. Outperformance driven by CoreWeave strategic efforts to build and scale quicker and accelerate time to delivery. Kind of was my thought. We're building more, and it's costing them more, but they're making more. So that is a good thing that they're actually making more out of it. Q2 revenue $1 to 106 to 1.1 billion, came in ahead of consensus for 988. So yeah, a lot of different things. It is definitely growing. It's definitely in the right spot. I'm not trying to get too wordy with you guys, but it looks like a solid place to be. It looks like there's a lot of growth. I'm guessing it is probably a very, very expensive stock when it comes to a lot of the actual metrics that we normally look at. So you're going to see a lot of different things here on this financial statement. I'm not going to claim to be the best at reading financial statements. I really wanted to just see like the PEs, the growth, the metrics that they have, not necessarily the cash that they don't have or what they're spending here. But I was trying to see some of the different growth metrics that we were looking at. I'm not seeing that on there. I can maybe see something here, but I'm not even. No, EPS is negative, so they are still burning more than they're making. So yeah, it is definitely something that is going to be a risky endeavor if you want to buy something like a CoreWeave. And I know a lot of people got into it because NVIDIA was getting into it. I might buy a couple shares just to bookmark it in my portfolio. I tend to look at it a lot more if it's in my portfolio versus just on a watch list. I really don't pay attention. So do I want to buy a couple shares if this thing comes on back down? Maybe I take a look at it that way. If I'm looking at it on a 3-month, where are we? Wow, this is why everyone's talking about it, because we were sub 50 and now we're at 140. That is 100% why this is everywhere that I look. It was $35 on April 21st, and now we're sitting at 140. So definitely the reason everyone's looking at this thing. We got up to 163. Maybe we find some support at this 100 level, the 100, 105. So if it got back down to around maybe around that 105 level, maybe if it holds that, maybe that's where I buy. It might already be too far away from us. It might keep going, and that's okay. I'm not hard pressed if this thing gets away from me. I've got enough AI plays. This is definitely a growth stock. It's not exactly what I'm looking to build out on, but it is a stock that makes a lot of sense for the environment, right? But do we want to buy everything that has a .com? No, I don't. I want to buy the best of the best, and I don't want to speculate too much on any given one thing. So that's what I'm looking at there. All right, time to pick one for this week. Costco continues to grow. We all know Costco is just a powerhouse. Broadcom, I did want to take a look at that. I did say something about earnings on Broadcom. Let me go ahead and share that. Let's pull up Broadcom, and I will take a look here. I told you guys I had a 280 covered call on Broadcom. Now we're sitting at 246. So unless we get some real solid upside in the next, I think it was the 27th, hopefully I hold on to these shares. That was kind of my hope, is I generate some cash. And I still think that Broadcom long-term is still a great stock. I still think that Micron is a great stock. That one was close to getting out of my portfolio, at least in some capacity, on Friday, but it came back down and closed at 108.56. So I dodged a bullet there. I was going to close it before the end of the day, but I did not, and I was able to hold on to it. So if I look at the 5-day, do we see that this thing got over 110? We do. It was at 110.74. Sorry if you guys can't see that. I might have my screen in the way. There we go. We're at 110.74. So yeah, definitely something I like there. I still think that Micron is a great stock that we should have been buying more of down in this trough that we created. We had this thing down sub 75. We should have been buying the ever loving, all of it, set $65. That would have been a fantastic turnaround. But hey, all these other stocks were doing the same. CoreWeave was doing the same. So if you were buying at a dip, it probably worked out for you. So yeah, what are we looking at this week? Boy, I'm met with the same challenges. Do we look back at an AMD? I think AMD kind of got away from us. Do we want to look at a Costco? Costco just keeps firing all cylinders. About 9% of upside. That's not bad for a Costco. We normally don't see close to double digit upside on ticker COST. Amazon, I still like an Amazon. AMZN, what do we got there? They were rolling out something new as well. I just saw an article on when it comes to Amazon. I know they had something. I'm going to try to do two screens here. It's probably not going to go well, but we're going to try it nonetheless. We've got Eli Lilly, which I still love. I still want more Eli Lilly. 30% upside there. It did come up a little bit. We got a couple of people knocking the target price down from the thousands to what was it, 950 or something that I said earlier. I still really like Eli Lilly. I really, really do. 30% of upside. I can't shake away from that one. Meta was not much upside. Next era, man, Next era. It's kind of that sleeping giant too, right? I think that could go well, and more people are using that electricity we were talking about. So we got that. Amazon. Here we go. Prepare to test humanoid robots for package delivery. Uber. They just announced senior accounts. They are going to be making a simplified version of the app for seniors. So we will see if that's going to make it more accessible, intuitive for older adults. We'll see what goes on there. Costco. They reported May net sales of $19.64 billion, up 6.8% year over year. They are still growing, guys. I don't think that this one's slowing down. We're going to see some new stocks brought in the S&P 500. Potentially, and this is what Bank of America is saying, so don't say that, oh, you heard it here, that Robinhood's coming into the S&P 500. They might, but this is just Bank of America's thoughts. Robinhood, Carvana, Cheniere, which is LNG, Interactive Brokers, a couple others, Ares Management, some other names as well that are not ones that I'm really so in tune with. We got AI rollout for Apple and Alibaba in China has been delayed. We're looking at that. I talked to you guys about Meta. We were talking about 52-week highs, Netflix, Broadcom, Robinhood, Visa, Sea Limited, Spotify, General Electric, Raytheon, Carvana, DoorDash, Snowflake, Axon, all were at 52-week highs this week. So yeah, a lot of different things going on there. Do we want to buy utility in Next Era? Do we want to take a look? We got a 3.17% dividend yield on Next Era. Okay, upside. Costco, you're getting nothing on a dividend there, 0.5%. Do we want to look at any of the other ones? CrowdStrike. Did we talk about that CrowdStrike numbers? I don't think we did. I think I had that one pulled up, but I don't think I actually got to it. They did have a loss. They trended way down. We got some price upgrades, but still as a hold from HSBC. They moved up to 382 from 326, but we did have this fairly solid drop this week, right? We had this 488 down to 450 on earnings, but then we closed the week middle of the range, right? 468. So we did come back up Friday. That was a lot on these Trump and Xi trade deals. So we're trying to see what happens there. I don't necessarily know that I want to buy CrowdStrike right now. I think it's already run up too much too fast. Only about 4% of upside there, and that doesn't really get me excited when it comes to something like a CrowdStrike. I'd rather buy Costco with 9 than CrowdStrike with 12, truthfully, because I feel a lot more comfortable that Costco is not going to have the volatility that a CrowdStrike would have. So I'm between, and I'm not ruling out Lilly. I think Next Era makes sense, but something's telling me to add some Costco right now. I like the stock. I like the growth that they're posting. I like the cycle as far as what the economy's doing and the fact that Costco continues to fire and they just keep on delivering. I think I got to go with the Costco right now, and I'm comfortable adding $200 worth of my own money to Costco for the investing challenge portfolio. They will report their next earnings in September on the 25th, so we will see what happens there. We got a lot of buy ratings here. Let's do a quick Refinitiv check. I will share this one. We are in the buy rating. We got a 5-year return of 224%. We've got let's get down here to some of the numbers I would really like to look at. Price target up around 7.8. We've got annual revenue growing by 8% by the end of 25 and 16%, about 8% each year for this year and next. We've got dividend growth, 13%. I like to see a company with double-digit dividend growth as well. Dividend payout is low, so they can raise that, right? They are spending that money elsewhere, but I like the fact that they are growing it and they have more on that payout ratio. It's very conservative in order to pay us those rising dividends going forward. A forward PE is at a 29% premium. I don't like that at all. I don't like that. Price to sales 1.7. That's a little rich as well. Forward peg ratio is at a 4.9. I don't like that either. All right. I'm not going to say scratch that. We're going to say let's go ahead and take a look at what NextEra has to offer. I don't really like those numbers, guys. I really don't. So let's take a look at NEE. Let's pull this one up. Let me get to the Refinitiv article for NEE. Let's pull this up. I'm going to try to share this one real quick. Let's go there. And the detailed stock report, we're going to click that. We are at a buy rating, only a 5-year return to 12%. So Costco was 210% higher. So definitely better long-term on Costco, which is one of the reasons that I like owning it, is that it just continues to grow. 13% higher on price target. We've got 13% annual revenue growth, which Costco was 8. We have a 24 where Costco was 16. So growing revenue. We've got still a double-digit dividend grower, but this dividend payout ratio is much, much higher, although it's a utility. So you're going to get those higher payout ratios on utilities, on REITs, on other things. They're going to pay out more than what a retail company is going to pay out. So that's kind of expected. Then we got the flip side. We got a 29% discount on forward PE. I like that a lot more. We've got a price to sales that is trading under their 5-year average, although it is above the S&P. We have a forward peg ratio of a 2.4 versus a 4 point something. And it is also under their 5-year average. Their forward PE, like I said, was at a discount. Everything here is at a discount. I do like a lot of electrical right now. I think that utilities make a lot of sense. You're going to be in the same category as like a Constellation Energy, which just did that deal with Meta. All right, well, I guess we're going to buy NextEra. And this is sometimes as simple as it is, right? I think about one that I like. I look at the numbers. I say this one is cheap. This one is not. Which way do we want to go with it? So for me, that's all it's going to be this week. Is it's NextEra versus Costco. Sometimes they're not compared. I'm going to say most of the time they're not compared, but on our short list of 12 stocks, when I'm trying to build out a position, this is a different way that I would do it, right? I'm looking from one to the other, and where do I want to put my hard-earned money to work? Where do you want to put your hard-earned money to work? So do the homework, do your due diligence, get out there, get invested, and stay invested. Let's let it grow together. Thank you guys for stopping by. That is all the time that I got for tonight. It has been a long day. And have a good week out there. Let's get invested, stay invested. I'll talk to you guys next time. Take care.